Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, today we will take a look at the euro currency, and in the weekly research we also have discussed this currency because the euro is finally turned to motion. So you can see finally it has shown significant action, and by let's say the breakout of the triangle has happened that we see on the daily chart. So that has happened last week. Today guys, in the weekly research we bring our fundamental view on the balance between United States dollar and euro currency. And in a shorter term perspective, it's not really very supportive to the euro because, as recent data shows, euro currently is highly dependent on such process as the tariffs that were initiated by United States, sanctions against the European Union neighbors. But all these processes are driven by United States. So in fact, directly or indirectly, it seems it turns that United States controls major processes that have impact on the European Union economy. As United States and Donald Trump in particular needs to resolve their own problems, particularly speaking, their tax reform, the stimulating of the domestic production, the decreasing of the trade deficit, which, by the way, with the European Union is approximately 150 billions, so significant. They will use all possible tools to serve these aims, and using the tariffs, the rising the prices for commodities for European Union is one of the subject to do this, because rising of the commodities will rise the cost of goods that made in the European Union. They will rise the cost of product and will decrease the attractiveness of the goods in the eyes of the consumers. So this is a very simple conclusion. Such commodities as the steel, is basic metal, aluminum, crude oil, all this make impact on different spheres of the production. Refinery of the oil is also, it's really big sphere of production that involves a lot of smaller industries, and that is one of the tools the United States will use. That's why, guys, speaking on the European Central Bank policy, it's not quite correct, I think, because when they are not totally independent and indirectly controlled by United States external trade policy, hardly something will happen before, let's call it, Donald Trump will let to do this. All this stuff makes me think that, shortly speaking, the United States dollar stands in a bit better position compared to the euro, at least in the short term. In the longer term, there are some other problems exist, particularly speaking, it stands around the United States national debt. And also we put this subject in our fundamental part, of our research, so if you're interested with that, you could read it. But it's a bit longer term perspective. In the shorter term, I think that that's major topic that will hold the attractiveness of the euro. Now speaking on the technical issue. Here, guys, we will talk only on the perspective of the coming week. So those of you who would like to know some longer term perspective, weekly, monthly, you could read our research. On the video, we will talk only on the perspective of the few sessions. On Friday, as you can see, market has stopped dropping, reached the daily oversold. It's also, by the way, somewhere around 50% support, guys, the favorable level for euro currency, and shows upward action. The major question here, the major concern on the daily chart, guys, is how to treat this retracement. In fact, we need to answer on the question what this drop is. Whether this is just some retracement inside of the consolidation, or this is starting of some bigger drop that could come in the nearest future. That's why this retracement becomes very important. If market will show just minor bounce, just to response on daily oversold and turn down again, this will be one story that will open road to the 1935, 1950 support and to the 115.50 in a medium-term perspective. If instead market will break the 121.70, 122 area to the upside, return back inside of this consolidation, this will be quite another story. And in this case, euro will keep chances on upward continuation. So this consolidation will continue. That's why this pullback here is very important. And we need to resolve this riddle, what this retracement is. At the same time, overall situation is not as boring just with the resolving of this question. We have real trading setup, guys, and take a look at the 4-hour time frame chart. Here we have nicely looking butterfly buy. Here, as you can see, also market totally has completed our suggestion on Friday that we said, you recall in our video, we said that we do not expect some significant dropping. We just will be watching for completion of the OP, and probably no other action will happen today. And indeed, as soon as market has hit the OP target, downward action has stopped, and market turned to the upward action. So here we have butterfly in place, and this ABCD pattern in place. So, what does it mean? It means, guys, that in fact, we have potential brand body sell trade. Because minimum target of the butterfly, usually with respect to the extension, stands at the 30% retracement. This 2180 level is also, guys, previous lows that we should keep an eye on, because this will be a very important level, as I said. So if market will not return back inside of this consolidation, it will look bearish and market will keep chance on downward action. If instead this level will be broken up and market will continue to move higher, that will be another story. But before this will happen, we should get trading setup of the brand body sell trade. So if market will reach this level, this will be a good opportunity to take the short-term bearish position. In this case, we will get either 618 retracement, or market will continue downward action that has been started on the last week. By my opinion, guys, chances on the further downward action now stands higher than upward continuation. By the technical reasons, we could see that downward action here was very fast. It's very good momentum here. Retracement were very small, and take a look like right to the OP and 127 extension target, we have the acceleration down. This usually, from the technical point of view, means that market has good chance to proceed after retracement will be completed, good chance to proceed to the next target. But take a look that the 1618 extension of the butterfly coincides with major daily support. It's 1936. Here butterfly stands at target 190.55. So that being said, overall situation that we have here makes possible taking the short position around 2180. As the reaction will start, move stops to the break even, and then just keep an eye on what will happen. Breakout through these lows will let us to keep position right to the 1950 area. If market will show just 618 retracement, well, in this case, chances still on the upward reversal will exist. So that is what we could do in the beginning of the week. On the hourly chart, it also shows that this will be not just fib level, but it's also confidence resistance, 2172, 2180. And also it will be weekly pivot point in upper border of this channel. So nice resistance area where a response could happen. That, guys, what we will be watching for on your currency in the beginning of the next week.